Welcome to the 𝐾𝐢𝐬𝐻�10�10𝙩 live stream every Tuesday and Thursday at 10:30 a.m. New York time or U.S. Eastern time. Hope everybody's having a good day. Today we're going to start off with the general idea of how Bitcoin is behaving right now relative to other traded assets or commodities within the world. And then we're going to try to make sense of Bitcoin's overall direction. Hopefully you've been watching my recent YouTube non-live Bitcoin updates, and if you have, hopefully you already know what I think are the key support and resistance levels, and right now prices, but essentially in a range created by very strong EMAs, and whichever way it breaks could be a pretty powerful move. However, I think there is a decent edge right now that things will break down, but in my recent videos I've been going under conditions in which the breakdown becomes more improbable, and those conditions would mean the probabilities of a move up would then take over. And we can review those here. But first off, what I want to start off with is just how is Bitcoin being handled here in the world? Let's dive in. Let me get on some charts here. This is the NASDAQ composite, futures composite, 100 E-mini futures, technically what it's called. You note here that the high here was around November 18, November 20th. And since then, so since late November, it's been lower highs and down. Bitcoin, November 10th, mid-November, has been lower highs and down since that point. Go to gold. Look at gold. Gold is screaming up right now as Bitcoin is making lower and lower highs and not necessarily lower lows on the daily, but in general, it has a downward trajectory. And what we can do to make sense of that right now is to know that Bitcoin is something that my VIPs in my Discord have educated me on fully. Because I'm not one who's extremely educated on traditional markets and overall monetary policy, global monetary policy, U.S. monetary policy. But one thing I've come to learn is that Bitcoin is definitely, right now, it's almost not possible to intelligently argue this idea that Bitcoin is being handled as a risk asset or a risk-on asset. In times of uncertainty, things like gold are a hedge against the risk-adverse type of global events, and you can see it trading up right now. Risk assets such as NASDAQ or, to some degree S&P 500, which this is the composite or the index for it, go to SPX, also is treated as risk on, and it's been falling ever since we've had some, pretty serious global issues because it's a risk asset, and that's the way Bitcoin is being handled right now. The question is, though, and that should be undeniable. I don't really think there's a way to argue that. And what you want to think about is there going to be a point in which Bitcoin separates from that? The intent of Bitcoin was definitely not to be traded as a risk-on asset, but right now, the algorithms and the trading desks that are trading, more traditional markets, they're clearly hooked up to Bitcoin because Bitcoin's moving with it down to the 5-minute candle. If Amazon pumps, therefore the NASDAQ composite in general pumps and Bitcoin pumps on the same 5-minute candle. If Amazon falls and NASDAQ composite falls, then Bitcoin in general falls. Right now on the 5-minute candles, Bitcoin's actually holding up stronger, which it's not a perfect correlation 100% of the time, but it's undeniable. It's definitely hooked up to traditional market trading desk. And one thing that I've been really curious about is what do we need to see in the charts for the conditions in which we say, oh, this is starting to separate from it, and it's going to start behaving as a hedge against inflation or whatever, whatever you hold dear to Bitcoin and how you want to label it. Under what conditions will that happen? I don't know what those conditions are, but I wanted to leave with this thought that Bitcoin, unfortunately, right now, is being traded as a risk asset. And with global events, I'm not going to, name any countries' names because I don't want to get banned off of, or, I don't want the YouTube to shut down my stream like it did maybe 3 weeks ago when I mentioned countries' names. But with that type of stuff happening, price of oil rising, or petroleum globally rising, you need to realize that that fact in and of itself is an additional piece of evidence that Bitcoin is going to drop. As unfortunate as it is, you have to make that connection. All right, now let's get back into the charts. And what I'm going to do is I'm going to talk about Bitcoin price for a while and, show you review the key levels you need to be looking at. I'm going to go down to, and what we're looking at here for new viewers is these are the master origin lines. Sorry for, returning viewers, folks who know all about this, but one thing to keep in mind is that, let me go like this. All right, this is the master, absolute, 100% undeniable, most important line in all of Bitcoin history. The reason why it's got blue stuff around it, all right, if you zoom in here, let me zoom into that section right there, because whenever Bitcoin goes near it, it trades in a range around this master origin line, which is the non-dotted line, all right? And historically, this line has offered extreme support, and Bitcoin has only significantly fallen below it one time ever, and that was with a global stimulus event. Not a global stimulus as in monetary policy, but a negative stimulus, which was the coronavirus, which I don't want to say the C word, so I'll call it, Rona. Can't even say the name of a beer on here, right? And that was a very scary time in Bitcoin history. It did recover extremely quickly, but it did capitulate. And right now, Bitcoin is on the same line. However, here's also one thing to consider. 100% of all times that Bitcoin's been below it, it's been the best time to buy within a 4-year period. You got to keep that in mind. Could it still capitulate? Therefore, better times to buy are lying ahead? Absolutely. And honestly, I think it's slightly more than a 50-50 chance that happens. Therefore, from my Tether holding standpoint in my portfolio, I'm a little bit more than 50% tethered up right now. However, with the idea that it's possibly, there might be a 40% chance it holds this, doesn't capitulate, because we didn't have a blow off top. Therefore, we might not capitulate below this line. Therefore, the price action that's lying under this line could represent similar to here, which was a monumentally awesome time to buy. Back here in 2015, monumentally awesome time to buy below the origin line. I think it is roughly a 35 to 40% chance. Therefore, in the altcoins that I want to grab and all that, I'm stacked up roughly 35 to 45%. Because I think that represents the percentage chance that Bitcoin truly does bounce here. But if you make note of those percentages, I still think it's probable, or there is an edge to the downside that Bitcoin's going to capitulate. And in addition to the idea that global events, it's traded as a risk-on asset, you also have the idea. I went to the weekly. Didn't mean to do that. I'm on the I'll stay on the 4-hour chart so I can go back in time and show you this. But I'm going to put on the weekly 10 EMA. You can see here that the weekly 10, the red line, is crossing this origin line, right? Therefore, that in and of itself increases the chance that this is getting ready to squeeze down. And here's the reason why. You go back in time to where Bitcoin's played around with this. Look what happened during this capitulation. Price could not stay above the weekly 10, came back up, tried to use it as support, failed it, and immediately capitulated as this weekly 10 was getting close to the master origin line. Right now, Bitcoin's weekly 10 EMA is even closer. Like, it's at the origin line now. It is at the point of potential capitulation. Go back to the previous. Well, actually, so we have that idea right there. Plus, I'm going to throw on the weekly 89 EMA for the next capitulation event, or the previous capitulation event. Sorry. Now we're going back to 2018, and if we zoom out here, this is the 20K top. After the amazing 2017 and 2016 bull run, all the dead cat bounces of 2018, around November 14th, Bitcoin capitulated, and I'm going to relate this to current price as well. This capitulation event, if you can very clearly see, this was from my non-live YouTube video, the one that says "ta-da," right? And it was actually this moment on that where you saw price moving that I said "ta-da." It was this exact cross. You have the weekly 89, which is the purple, and you have the weekly 10, which is the red line. And that squeeze instead of the master origin line, because price fell to the master origin line, so the master origin line was not in play. Bitcoin fell to that. I mean, look how perfectly that, like, look how perfect this is. As it fell to the master origin line. So the master origin line back then did not cause the capitulation because Bitcoin price was relatively way, way over it in this ascending trend line structure. But what you had here that is similar to current price action is this same squeeze play. Red above purple, weekly 10, weekly 89. Now go to current price. I'll take off these origin lines so it's not as, I mean, look how similar that is. Look. Look at that. That's not good. And so I'm going to zoom out a little bit here. Now what you have here is this price action, current price action, is both very similar to what happened during coronavirus dump, which is the red crossing below the origin line, plus you have the event that happened in the previous capitulation event, the red crossing below purple. You have both of those simultaneously on current price action. It's double bad. And then in addition to that, Bitcoin's treated as a risk-on asset. It's not moving up like gold. There are just so many things that saying this is going to really, go down here. All right, and if setting up these origin lines like I have is something of interest to you, what I do for my Discord community is, and again, the links to the Discord are in the description section of all my videos, I think including the live video, so you can check that out. But if any of this stuff is interesting to you and you have a hard time setting up, I mean, even the Cryptillions have 2 30-minute live calls a week, and you can jump on there and ask me, even share your screen to say, hey, did I do this right? And sometimes people come on and say, okay, I want to make sure I have the master origin line right. And then once they get that right, it only takes about 10, maybe 30 seconds to set that up. And then I show people how to very simply, make parallel lines to it. So let me zoom in here, and you can I show you how to just make the parallel lines really quickly. Similar to this. You keep dragging, and I'll show you the right ways to do it. And if that's of interest to you, the links are down there. Because this is it is the most important line in all of Bitcoin history by a mile. And it's not really, I mean, in my opinion, I don't think there's much of an argument to that. Unless maybe you picked an EMA, which is, it's not really a line though. Those are curves, and they're moving, they're living animals essentially. So, a straight line, it's the most important straight line in all of Bitcoin history. And I think that's undeniable. And right now, price is under it. And then you have the weekly 10, which has been the resistance ever since the 69K top. 69K top, fell below it, used it as resistance, fell below it, right as it failed it. I mean, this huge event. I mean, look, this drop back around early December, it's not a coincidence. It happened, right? I mean, look, let's zoom right in here. I'm on the 4-hour chart. It's not a coincidence that happened after price could not use it as support. Resistance, wick up resistance, wick up resistance, wick up resistance, kablam. It happened at the weekly 10. This is the key line ever since the 69K top. And it's still behaving, it's still the line that is pushing Bitcoin down, and most recently 3 times. 1, 2, these are straight up rejections, and this is a failure. So the difference between a failure and a rejection is a rejection typically comes above, or comes exactly to it and pings off of it like bumping its head. A failure is when it does get above, but then it rolls right over. That's a failure. Failure here, 2 rejections there. This is these aren't perfect rejections, but they're still rejections, and this is a failure. Therefore, a failure and a rejection are still, ways to identify something as a key resistance. All right. And again, this purple line is the same purple line that initiated the capitulation of the 2018 back in November 14th of 2018. And it is being used as support in general right now, mixed with the bottom trading channel of the origin line. So you can see here during this drop, Bitcoin was more attracted to the bottom trading channel, instead of the using the purple line of support. But now, where are they both? They're at the same level. Therefore, if it falls below one again, it falls below both, and it's getting ready to tank. And then from the coronavirus drop, you have the same setup. I mean, this is looking pretty bad, folks. So I don't know if there are too many bullish folks out there anymore. More immediate bullishness, always trying to look at, buy the dip and what'd you buy. I think those types of tweets have really calmed down on Twitter, thank God. I really thought that was quite, moderately irresponsible to see all those tweets from folks with large followings. Every dip, like when the daily is in a downtrend, people saying, what dip did you buy? What dip did you buy? When it's, pretty evident that we're entering a bearish market, very bearish trend. And I think that's calmed down. And so that one thing gives potential evidence. I'm not saying I'm making a call off this, but typically when people surrender like that, that's sometimes when you get one last move up to get everybody bullish again. And the reason that could occur here, and Bitcoin could temporarily separate itself from risk assets like NASDAQ composites, is because the big boys in Bitcoin, with large trading desks handling hundreds of millions of dollars or whatever, they would want to bait a lot of people to take on longs, because as those retail people or, dumb bots or whoever, or even smaller institutions who aren't, who can't really move price of Bitcoin by dumping it or pumping it on spot trade, what they want to do is to get people to take a bunch of longs, because the big boys who want to then drop it, if there are, for example, on one exchange, let's say Bitfinex, if there are only $20 million of longs on the table, then those big boys can only technically on that same exchange have $20 million of shorts. But what if their goal is to say, I want 80 million, or let's pick a round of $100 million dollars of shorts? Well, they need to bait more and more people to go long first, so that once they hit their goal, then they can say, okay, we'll now go off futures and go to spot trade, and we'll start selling our Bitcoin real hard. And as we sell it, even if that spot trade is at a loss, maybe they bought that Bitcoin that they're selling at 50K. It doesn't matter if they're selling at a loss, because they're going to make a lot of money by having $100 million, on shorts, figuratively, in that setup. And it's less profitable for whales or big boys or whoever you want to call them to not massage price to the upside before a capitulation of it, because they can make so much more money if you have a fake out to the upside first. And so these little fake outs here, all of these right here, these three combined, getting people excited, that could be enough. These three together that could be where the big boys took on more and more shorts and are still holding them at these levels. And it's possible that it is ready just to roll on over, but if there is a next pump, I would very, very specifically be skeptical of it, because of that idea that I just explained. Therefore, in general, if there is a pump and you see crypto Twitter, crypto, YouTube really blowing up, okay, it's going to be hard. And altcoins are flying. You see, like Luna go up to $110 or something. Just really, and maybe Atom and Luna are kind of like the top players in crypto right now. Roughly the best performers with the most recent all-time highs, essentially. And you'll see a lot of that stuff and people getting bullish again. But I would want to warn against you getting trapped in that emotion. Rather, the way you would want to treat it is this. Just like everybody, likes to say, buy the dip. Well, the same concept is sell the rally. So in an uptrend, right? In an uptrend, you do want to buy the dip. Even if it's not the ultimate low, you don't care, because it's a strong uptrend, you buy the dips. In a downtrend, the version of buy the dip, you don't want to buy dips in a downtrend. The equivalent to buying the dip in a downtrend is to sell the rally. You want to buy where you think it's leveling off and sell into that rally. That's the same thing as buying a dip. And if Bitcoin were to pump here shortly, with a month of March or April, because it might not capitulate yet, and honestly, it might not capitulate at all, but given that the pressure is down, and it's statistically at this point, you have a moderate edge on price getting ready to tank within the next, I don't know, 30 days. Could be 10 days, could be 1 day, but whatever. There is an edge on price tanking. If there is a rally, I would challenge you to keep that in mind. Don't get midterm time frame or long-term time frame bullish. Don't assume we're entering the next bull market necessarily, but rather I would not financial advice. I'm not a financial advisor. Clearly talking about Pokemon cards, crypto Pokemon cards, the trading cards. That's what we're talking about. You would want to sell into that rally with your Pokemon cards. All right. Because I can really anticipate that happening. It's not guaranteed to happen, again, because these price being brought up to here and essentially massaged around the same level 3 times, that could have been where big players were stacking on, shorts. However, a lot of the data, okay, the reason, and another thing is the data doesn't really necessarily suggest that the big boys are stacking on their shorts or have stacked on their shorts. I mean, so this is not overall all exchanges. This is only Bitfinex, which is where most, I would say, more whales play than any other exchange, and it's the only exchange, thank goodness, that just flat, like straight up gives the, to my knowledge, straight up gives this information of its longs to shorts ratios, and the longs right now are really skyrocketing. Could this be pure retail and not the big boys? Yeah, that does happen. That can happen. But if that were the case, you would also see shorts starting to skyrocket, and they're really not. And so I wanted to also give you one piece of evidence that's going against the case. That Bitcoin's going to roll right over, because I would assume that before a capitulation event, you would have a type of bull trap where this would then start skyrocketing, and that would be your key in a rally. Okay, you start seeing these shorts skyrocket up on this particular exchange. That could be your warning sign. Is it a perfect no-brainer? Is this a 100% perfect correlation? No, but this in general is kind of saying, geez, it's evidence towards the idea that there might be one more pump up. Because it doesn't look like the big boys are, have their shorts in place. It doesn't really look like it. And which is, more and more to the idea of, if there is a pump, please remember the idea of buy the dip. The equivalent of that in a downtrend is sell into the rally. And don't get caught up in all the Twitter and, the noise of, oh, we're going to the moon now. Back up to 75K. All right, that is what we got. So the key things to look out for if you don't have origin lines, I could just really take off origin lines here. Take them off. For those who aren't playing with that, is I can go even down to the 4-hour chart. Doesn't matter. The key things to really look out for right now are the weekly 89 EMA, which you can use the MTF EMA over here to set that up. Even if you're on the 4-hour chart, you want that on your chart. Okay, you want it like very, very handy. And then you also want the weekly 10 EMA. I personally also throw on the monthly 10 EMA, which is the white line, because this is doubly the pressure down. It's kind of like in line roughly with the weekly 10. And so the times that Bitcoin has gone above the weekly 10, what ended up stopping it? The monthly 10. Right? Look at that. I mean, look here. Let me go down to even like the 5-minute chart so you can see how perfect this is. Look. Price charged above the weekly 10, and the monthly 10 really just stopped it. So I personally have these 3 EMAs as my focus points, and just realize that this, if you don't have origin lines and stuff set up, the weekly 89 is directly in line with the bottom channel of the origin line channel. And if it comes down below here again, I mean, it could really accelerate to the downside, and it's on the verge. However, right now you do have a decent higher low structure right now. Let me take off these 2 EMAs. You do have a decent higher low structure going on right now. Something to this effect. And that's not horrible, but that is in contrast to the ever approaching weekly 10 EMA. It's pressure down, pressure down. Like, we are getting very, very, very close to something massive happening. And given that there is an edge that it's going to go down, just definitely keep that in mind. And contrary to the edge of going down, it's possible that you get one more pump up, but you would want to, not financial advice, Pokemon cards only, sell into that rally. That's what I got for my Bitcoin. All right, I'm going to start looking at the questions here. Hey Harrison, nice to see you join the YouTube tier community. I appreciate it. Good evening. So, Lord Unfemi is good evening. You must be in Europe or Asia if you're saying good evening. Nice to have you there. All right, preach. All right, how many trading signals do you post in Discord? In Discord a day? Well, during this choppy price action, I am not giving a ton of trading signals to the entire community. Rather, I do it live on the. I have live calls up to 8 times a week, depending on the tier. Okay, VIPs have their own 8 slots, but they technically can join. They can join the Cryptillion tier slots and the Crypto Crackhead slots, and the Crypto Crackheads can join the Cryptillion slots. So so there are 3 tiers. So the VIP tier, the middle tier, and the smallest tier, or the entry tier up here. This tier in the middle can join this tier's live calls, right? So technically, the middle tier has 4 live calls a week. So during that, what they do, instead of me just pushing signals without a live description of what's going on, people come on those and say, okay, I want to get into this position, or I'm already in this position, and should I bail now? What should I do? And a lot of the conversation is, shit, I entered this, I didn't set stops, how do I get out of this, right? Therefore, the signals that I provide are a little bit different than other communities because in this moment during choppy price action. Now, when it's a straight up bull market or it's more straight down, like it was from November to, I don't know, I would say January, I did give more signals for shorts and all that stuff. But right now it's very choppy, therefore I'm doing it live, and other communities don't offer 8 live calls a week. It just doesn't, I don't think you can find one out there that offers that. Therefore, people come on to get ideas, and the cool thing about that is, let's say we have 15, 20 other people on that call. If one person who didn't ask the question sees another solution, another style to set stops and set their risk management for that trade, they voice it up and say, hey, I think I would do this. I would split it into 4. I would split my stops into 3, or I wouldn't, I would, be moving my stops up instead, of the strategy that I propose. And a lot of times we come to consensus. Okay, you have these 4 options on your risk management strategy. Whichever one's favorite to you, go ahead. And that's how I'm rolling right now in this choppy market. I'm not just going to say, hey, here's a great short signal on Luna. It's too choppy for that type of stuff, and I'm simply not partaking in it because I want to be able to give the live the live feedback on that. All right, let me. Hey, thanks, Mike. Appreciate you too. How to prevent catching a falling knife during capitulation? Prevent? So somebody's asking down here how to prevent catching a knife during capitulation. I mean, the way to prevent a catching knife is to not start buying as it's still just massively red candles. Or what you can do, you wait for a higher low. It's that simple. But one, I guess, there are a couple strategies. The easiest strategy would be something like this. So this is for spot trade, for DC dollar cost averaging. What I'm about to say does not apply to futures. You would not want to do this for futures. Rather, spot trade, this could work. You could very simply have set levels, whether they're horizontals or ascending trend lines, it doesn't matter. You could say to yourself, all right, the first time that I'm going to buy, if there's a capitulation, all right, let me, which way would I do this? Macro range tilt. All right, let me take off these EMAs. All right, you can say to yourself, you have a couple different strategies. Say, okay, right now I'm an 80% tether, and I'm only 20% in. I'm going to hold on to, let's just figuratively. And you say, among this 80% tether, okay, so now take that. Among that chunk of tether that I have, I will use, when Bitcoin hits the bottom of this range here, I will pull the trigger on 10% of that. Because if it hits there, I still think it's more likely it's going to fall down, but I think there's at least a 10% chance it's going to bounce from there. Or if your opinion is that it has a 20% chance or a 50% chance of bouncing there, whatever you feel is the percentage chance of a bounce around that area, that's the amount of tether that you would, pull the trigger on. So let's call that 20% of your tether. And then you make another goal down low is historically, the weekly 200 is what MA is what gets price right. So the MA and the EMA of the weekly 200. Let's go ahead and do this. Let me change this. Weekly 200 EMA down here, and the weekly 200 MA is about right at 20K. So the MA of the weekly 200 is about right there. And you could say, all right, I will pull the trigger on 20% there. I'll pull the trigger 25% at the weekly 200 EMA. I will pull another 25% at the weekly 200 moving average, not EMA, because the moving average 200, so just without E, so not the exponential, the 200 moving average has gotten the last two bottoms pretty well, like extremely well. All right, and then you can make a goal for, okay, any wick below 20K, I won't save any more tether. I will put in orders down here or start buying when, if I see Bitcoin falling to 18K, I will pull the rest. And because structurally there is more support down lower at 14K on a weekly case, the rest that you pull, if assuming you catch it here and there's a bounce, the amount that you deciphered as the rest or determined was the rest, you could sell into whatever rally with the event that it does then head lower, and therefore you freed up more tether and took profits. You could do stuff like that. So a DCA plan could be your way to not, to try to control yourself from catching a knife. That would be one way. And if you're dealing more with a non-DCA type of strategy, there is no really best way to do it. You would the signals I would look out for is very specifically higher lows on the daily RSI, something to this effect. So if you have a low, and then there are two ways this happens. If there's a scream down and price has a strong rally, and the RSI gets above this moving, and I have a tutorial on how to set this up. It's I linked people to it at the end. It's in the playlist of trading basics or whatever I've named it. It's actually I've gotten a few compliments on the tutorial. They say this is the best trading view tutorial I've ever watched. But that was only a few people's opinion. I'm not making that claim myself. But anyway, if you don't know how to set this up, I have a trading view tutorial. Just go on my channel and look for that playlist. But anyway, there are two ways that a higher low of daily RSI happens. Either it's the RSI, the green line screams above the white, and if it does happen, what you'd want to do is you would want to wait until the RSI comes back below the EMA and forms a higher low. That would be one signal. However, you're missing out on a lot of price action, but that helps you not catch a falling knife. The other way that you get a higher low on the daily RSI is like this. When you're consolidating, the green is consolidating under it, and then you have a low, a lower low, a higher low, another higher low as it's consolidating under it. Sometimes that's a pretty good signal. Did that signal work out perfectly in this event? No, because price ended up rolling back over, but that helps you not catch a falling knife. So let's go over to whatever happened in price around here. Around this, I guess this was around Christmas, and we'll take a look at what that would have helped you out with. I've put the pin in it right there. Actually, no. Yeah, higher low and higher low. So these two areas, one here and one here. And I will make a line there. And the other one is here. in that strategy, during this down move, you can see that this would have been trying to catch a knife. If you waited for a higher low on the daily RSI, you would have been buying on this red candle here. Would you have bought the exact bottom? No, not necessarily, but on this candle you would have been buying, or on the next candle over, because you'd have to wait till the next candle over really to identify that that was a higher low down there in the RSI. So you would have been buying here on that candle and there on that green candle, and you would not have caught that. You would not have tried to catch that falling knife. Which, if you're trying to catch this, you probably would have bought some here and here and here and been screwed the whole time. But this is a lot safer, because even though it went a little bit lower here, this allows you on futures, if you're trading with leverage, this type of stuff allows you to put your stops into profit, and then take profit, small amounts of profit, if you get stopped out with stops and profit, but you're not getting screwed by trying to catch a knife and getting screwed on futures. Yeah, if you're playing with futures, catching a knife is really the fastest way to lose your money. Or trying to short tops, which is the same thing. It's the equivalent. Kind of like buying the dip and selling the rally are equivalents, depending on what the trend is. Catching a knife and shorting tops, trying to short tops, are equivalents. They're the same thing, and they are the fastest way to literally lose your money. Or is it very attractive to try to do so? Absolutely. It took me a long time to try to get out of that habit. On a personal level, something I tell to my Discord community quite a bit, for whatever reason, the way my brain is, I don't know, it's like one side of my brain works and the other one doesn't. Maybe some of you agree with that. No, but for some reason, I'm not attracted to trying to catch falling knives anymore, but there's something in me that still loves the equivalent of that, of trying to short tops. I don't know why and I have to fight myself to not do it. Like, just wait for a lower high, right? Wait for it to really go down and then scream back up, get that lower high, usually on a 45-degree angle, and just wait for it. But I personally struggle with that. So that's a good question, and that's something that most people can relate to, because it really is attractive. As long as you haven't screwed yourself too hard by trying that over and over, at that point, if you haven't been through that journey yet, it's obviously your brain would say, hey, this is attractive. But once you realize over time, wait, this is a horrible way to try to make money, is to try to short tops and to try to long, or try to catch a knife. It takes a while. It's similar to the analogy, a kid touching a stove, right? And the phrase, something the phrase is, a kid only has to touch the hot stove once, and he or she will never do it again. Well, in trading, typically you need to touch the stove about 3 times before you really learn your lesson, as unfortunate as that is. So don't expect yourself, give that question. It sounds like you might be a person who has tried that a few times. And if that's something that your brain is really attracted to, just realize that it might take you touching the stove 3 times before you realize, I'm not doing this shit again. But I just gave you 2 different ways to try to help yourself avoid that. All right. Thanks, John Kim. Appreciate it. All right. Rock and roll. Okay. Short-term. Okay. I have a very easy short-term. That's a great question. So somebody asked, what is a short-term target for capitulation? Very easy. And really, you can just go to indicators, type in EMA. I think it's called EMA fill. Oh, no, it's this one right here. Moving average shaded fill area crossover. You probably don't have to type in the whole damn thing, but you can just type in EMA FILL or whatever, bam, and it'll be that one. And it's made by 𝐴_11. And once you find it, you want to start, right? You want to start. So therefore, whenever you hit indicators on your chart up here, it just automatically is there. So I have it down here, start. And I have it saved as a template. So if I move my chart and do this, or move my chart and do that, or do this, right? My chart looks different. Now I have the BBWP down here. I have different templates set. And again, my trading view tutorial, how to set up a chart, shows you how to do this. I think with the free version, you only get 1 template, but still, that's enough. Like 1 template with 3 indicators is fine. But I can just click back up at this E template right here, and then hit the eyeball, and kablam, I have this. So per that question, And I'll go ahead and extend this blue line like so. Make that blue. All right, so every single capitulation, 100% of them, all right, has gone below the blue line. Went below the blue line. Went below the blue line twice. Went below the blue line. Went below the blue line. If it capitulates, where the hell do you think it's going? Below the blue line. The average, so I think this one went below 17%, this one went below 7%, and this one went below 11%, something to that effect. So the average is roughly, double digits, so roughly 10. And if it were to happen, let's say capitulation next month, in the month of April, you would extend this line one tick. Boom. Something like that. Try to keep the trajectory one tick over. Okay, let me make it like this. Boom. Okay, over one tick. And then if it were to happen in April, measure down about 10% or so, and that's $21,700. So the longer that Bitcoin can go sideways without capitulating, the higher and higher up the number would be. That's one way to do it. It could easily come up shy of 20K, which makes sense. There are going to be a lot of buyers stepping in around 20K. Honestly, that target makes perfect sense. However, if you use other ways to do this, you could do something like the weekly and throw on. Look, cross bad, right? Remember this? Remember cross bad. Yeah, like this is still crossing, folks. Very bad. Another piece of evidence that this is the edges down. Anyway, back to your question. So I'm going to take this off, and one way to do it is to throw on the only two moving averages, one exponential moving average and one simple moving average. So I have the weekly 200s on. The bright orange is the EMA, and the dull orange is the MA. So the simple moving average is the dull orange. The bright one is the exponential moving average. And you can see here, all these capitulations, okay, where did they go down to? They went down to these two lines. And technically, each of them did hit or go below the dull one, right? Okay, so here, the 200, the capitulation starting in November 14th, which also perfect. Here, let me throw on the origin line, which the origin line right now is structured a little bit differently because Bitcoin's getting ready to go below it. But you can see it also hit the origin line. So the origin line plus, here, let me zoom way in. I mean, look, it got it perfectly. Origin line with the weekly 200 MA. Take that back off, though. But historically, the 200 EMA is what gets it roughly correct. It at least goes to that point. And here, coronavirus went significantly below both. That went 28% below. It didn't get it perfectly, but it still at least touched it. So every single one has at least touched it, right? Every single one. This is a little counter evidence. This gives you a slightly lower target than the first method with the EMA fill. Currently, this is sitting at, well, actually, it might be the same target if I extend it a whole month. So if I extend it 3 ticks, 1, 2, 3. 3 ticks with roughly the same slope. Going to it exactly would be 20,500. So this says if capitulation happens in a few weeks, so 3 weeks or so, late March, the capitulation begins. This is kind of insinuating as to if it doesn't wick below, and this gets the price right, price would drastically turn around and do a V-shaped type of deal just before 20K. So the longer we're going sideways, the higher and higher this number is getting. In both of those ways, we are suggesting just shy of 20K. Structurally, though, just horizontals, you really only have that horizontal. And I would actually make this more of a box, but the second one is a box. But you have a box between about 14K and 11K. From a horizontal standpoint, let me take off the EMAs, you get a little bit different evidence here. You get a different suggestion. if Bitcoin falls below the 30s, there's nothing stopping it straight down to 18, or about 19K, right? Where these candle bodies here were, about 19K from a horizontal standpoint. And if that doesn't hold, the next thing down, is technically 11 to 14 from a horizontal standpoint. But you have to trying to make guesses of where this would capitulate, if it capitulates. And again, this might not capitulate because there was no blow off top on Bitcoin. Bitcoin might, simply stay in a range as altcoins capitulate or slowly bleed with no capitulation. It's totally possible. And that's kind of like what my origin wave theory is about. Origin wave theory, a video that I've made. It's in my playlist of most important videos I've ever made. But it's kind of insinuating that there might not be a capitulation. That the master origin line does roughly, in general, keep Bitcoin held up. It might play around it, wick below it and stuff, but it's not going to capitulate below it. And as Bitcoin is staying weak throughout this time without capitulation, that altcoins bleed out. But so it's not guaranteed that Bitcoin's going to capitulate, but there is a slight edge towards it right now. But it's not guaranteed, right? Okay. So if you can mix this horizontal stuff with something to the effect of go put these lines back on, the first. All right, sorry about that. I think my computer didn't like what I was doing there. All right, but I think sorry for that delay. We're back on it. Yeah, I don't know what my computer just did. And my wife called me at the same time. I was like, maybe she's just bad luck. Stop calling me while I'm busy. All right. But yeah, I think I got to the good thing that hiatus happened right as, I was already finishing up that answer. But that was a really good question. Hearing a lot of FUD from the roadmap. Yeah. All right. Okay. Idea. All right. Let's check out Idea. And for those people who are into micro caps, small caps like Idea, or specifically Idea, I did just give an update of the project along with about 6 minutes of price analysis. And if you wanted to go more in detail there, but I mean, I have, let me go down to, the 8-hour chart is actually pretty, I'm on the 8-hour chart with the origin line set up. And this is the weekly 10 EMA. There have been times where price, of an asset can get above the weekly 10. So this red line here, let me zoom in. And similar to how, either you have a rejection or a failure, it's possible that it gets above and fails it. Okay, it is possible. However, at other times, getting above the weekly 10 EMA on any asset, again, it could be the price of oil, price of black market decimals, Pokemon cards, doesn't matter. When it gets above, it has a strong chance of leading to a larger trend up. Okay, but you have to mix that in with what the hell is happening in Bitcoin and all of crypto. And, on Bitcoin, price is below the master origin line, which historically is a fantastic time to buy within 4-year cycles, assuming that there is a 4-year cycle still. With that loose assumption, I don't know if that's true. If it capitulates, it will be confirmed, right? If there is a capitulation in Bitcoin price, that is confirmation that 4-year cycles are still intact, which, yeah, but it's still unknown at this time, whether lengthening cycles or 4-year cycles will happen. Anyway, we're not in a strong uptrend right now. Which, in general, it might lead to the idea that, no pun intended there, the thought that it might be slightly more statistically probable that eventually price of Idea asset will drop below and fail this. It is possible. But if Bitcoin starts charging up, and also if Bitcoin gets above its weekly 10 EMA, which it could happen. I still think there's, as I said at the beginning of the stream, I still think I'm reserving like a 35-40% chance that could happen. I simply think that there is an edge, so a statistical more higher likelihood that Bitcoin does not do that, right? Okay, there's a statistical slightly higher likelihood that Bitcoin's going to capitulate rather soon, within 30 to 45 days. Um, and and if there is a bull trap, that could lead it into summer. Like a bull trap could last a few months. It really could. All right. But anyway, in the event Bitcoin can get it back above its weekly 10, whether it's a bull trap or not, IDEA will really keep charging up. But if Bitcoin starts falling lower and lower, as IDEA is still maintaining posturing above its weekly 10 EMA, which is this line, and I'm on the 8-hour chart, so you can see more candle. Hell, I'll go down to the 1-hour chart. Watch. I mean, see how that's a perfect retest, and you really actually you have a retest of it too. I mean, this is really good. Failed it, or no, rejected, consolidated under it perfectly, kablam, nice perfect retest, boom, nice perfect retest, and it looks like it's gonna come up to this next origin line. It really looks like, assuming Bitcoin doesn't capitulate sooner than later, it looks like IDEA is headed straight up to 22 cents. 22 and change, maybe even 23. And from a horizontal standpoint, how does that? I think that works out to roughly the mega horizontal that it has, which I covered in that video of IDEA. You have a horizontal sitting about right there, and 22 cents, yeah, would lead it to the top of that box. Yeah, it really looks like it wants to get 22 cents, at least. And because all of this is happening, while Bitcoin is simply trudging sideways, if Bitcoin can continue trudging sideways, this can continue rallying above the weekly 10. It really, really could. And in that event, if Bitcoin does capitulate, just keeps going sideways and up or sideways and down, just nothing crazy, but nothing strong either. I mean, this could rally as into the 30s as well, with more time of Bitcoin going sideways specifically. So you just got to pick. You simply have to keep your eye on the ball, which is Bitcoin. So the primary indicator, the primary two indicators for IDEA price right now is its weekly 10 and the price of Bitcoin. And you keep your eye on it, and you make adjustments as changes happen in either one. But right now on IDEA, you have two perfect retests. All right, remember when look, these retests were, I mean, as about as good as you can get. Go down to the even 1-hour chart. I mean, it is really respecting that line. And look, it is getting bought back up. I mean, the weekly 10 is potentially single-handedly the most important EMA of anything. It is the biggest kahuna in my opinion. But yeah, these are perfect retests. So it looks two nice retests. And this second retest aggressively bought back up. People are buying this, and people are staring at this. And it looks like the buy pressure is going to keep it above. So if Bitcoin could keep going sideways-ish and not capitulate, this is going to hit likely 22 to 23 cents. Might come back down at that point, and then retest the weekly 10 EMA, which at that point could be going like this. Okay, so the weekly 10, and then if at that time, so at the time that it hits 22 cents, comes back to retest this, for example, or it might only test this origin line, could go like that. If Bitcoin is still going sideways and not capitulating, then I would assume its next move up. So this is why you want to keep your eye on the ball and make adjustments, because if Bitcoin starts tanking, around this time during this down arrow, well, then this down arrow is going to go wham, right? So keep your eye on the ball, essentially. But if keeping your eye on the ball, if Bitcoin is still steady, going sideways-ish and not capitulating, then, I mean, very likely the next move up would be in the low 30s. Somewhere to that point, which is an origin line and also a horizontal. And that would be the price path in the conditions that Bitcoin is not capitulating quite yet. And all that could happen, within the matter of a week. So in 1 week, price of IDEA could be at 30 cents in that price trajectory. Does it have to do it in that time frame? No, but that would be one guess under the assumptions that Bitcoin price stays pretty level. Okay. Sub $1. So somebody asked, assuming the question is based off a capitulation event, with that assumption in the question, in a capitulation event, does Trias have the chance to go sub $1? On a wick, not much more. I mean, you would not be able to catch it really live. You would have to have orders, limit buy orders already in there, or stop market buy orders down there. You have to have those already chilling. It is possible. Is it probable? No. If there's capitulation, I can see it stopping at like $1.12 on a wick, and then immediately coming back up to, $2.50, like real fast. And therefore, if you have your orders already in this area around $1.30 or so, $1.50, between $1 and $1.50, and there was a capitulation which immediately bounced up, you'd be double your money like that. So, and this is one thing we talk about a lot within the Discord community. Again, links to the Discord community in the description section of all my videos. There are 3 different tiers, and the lowest tier gets 2 half-hour calls a week with me, and the Cryptillion tier gets double that time, and the VIP tier gets 8 slots to themselves here. All right, and this is something we talk about a lot. There is, strategizing. Okay, with my Tether allotment, let's say, out of all my crypto portfolio, I have X% in Tether. What am I doing with this, right? Am I trying to play bounces now with Bitcoin? Like, am I using that to like try to, trade and do stuff? Or do I want my X% of Tether, so the X portion of my portfolio that's in Tether, do I want to kind of like lock this and not touch it so that I can have these limit buy orders or stop market buy orders down here? Yeah, do I want to reserve them for potential capitulation when I'm sleeping? And really, capitulation, in my opinion, I think it has a higher likelihood of happening at like 3 a.m. on a Sunday morning, like late Saturday night, Sunday morning. It's just, that's probably when it's going to happen, because the market books, or the what do you call them? The order books are thinner, and if big boys want to have their shorts already, if they already have the shorts and they want to be able to drop Bitcoin price, they're going to do it when there's the least amount of volume in the order books. So when they hit market sell of 100 Bitcoin, it eats through those buy orders faster and price goes down faster, and they make money faster on their futures, which is, in my opinion, why, if there's a capitulation event, and again, I think there's this statistical slight probability that there will be, but it's not guaranteed. But in that event, that thought increased the chance that it's going to happen when the order books are thin, which is American time zone, really early in the morning. All right, and it also avoids the bulk of Japanese trading, because a lot of folks, the trading volume of Far East Asia at 3 p.m. in their afternoon is lower as well. It's just the sweet spot for taking price of Bitcoin or any large asset. But it doesn't guarantee it'll happen like that. I think the capitulation of 2018 on November 14th, that actually did not happen in the middle of the night. I remember watching it happen. I wasn't a YouTuber back then, but I was on watching other people, and we were just watching it fall for day after day after day after day. Like it didn't capitulate all at once. It was days. It was like 6 days of just straight carnage red. It was, or maybe only 3, but it was days during the weekdays. Anyway, all right. But now that big players are in it, these flash crashes have happened a hell of a lot faster. So I would expect it to be a lot faster than the capitulation of 2018. A hell of a lot faster. But yeah, there is a chance, but you'd have to have your buy orders already down there. That's the only way to catch it. And if I were trying to catch it, I would probably want to catch it between, something like $1.30 and $1.50. Kind of would be my goal. But it might not get down there, And yeah, there might be other ways to do it too. You might want to try picking some up at 250, some up at 3, a little bit like 10% at 311, 15% here, maybe 10% here at 2, 10% at 160. You might not just want to stack a bunch of money at $1. You might want to like DCA type of stuff down instead of stacking everything there. All right, good question. End of year 2022 B Pro. I don't know what to think. I don't know what's going to happen in 2022. I mean, obviously, it's going to depend on Bitcoin. If Bitcoin does what I think it's going to do, okay, in that event, let me mark off the end of 2022. So here's the end of 2022 right there. Let me extend this line. I could see BPRO doing something like didn't mean to do that. Yeah, it's going to go left. I could see BPRO doing something like this. If there's capitulation, whatever, then you get your double low, maybe even make a lower low, then really charge up, maybe be back up at, maybe just under a penny at best. 0.007 to 1.2 cents. But if a bear market's longer and more drawn out, it could, actually that's a juke. So let's say it capitulates faster, whatever, you're gonna rally, you have your double low, and then it just chills. It could only be at 0.005. So 0.005 up to 1.2 cents, something in that area, with this type of price path, something. Because typically altcoins, they make a lower low as Bitcoin forms its higher low after capitulation. That's just how it typically works. Does it have to work out that way? No. But I mean, like, even look at Cardano. But let's look at where Bitcoin, last time made its higher low. Let me take these off. Okay, so 20K top of 2017. Its capitulation event, December 2018, and its higher low over a year later, March 2020. So we're going to focus in on what Cardano did during December 18 and March 20, all right? The year 20. So 2020, December 18th. Cardano made a lower low here, and so did most altcoins. All right, so go to Cardano. Remember, December of 2018. Which is right there. And then Bitcoin made its higher low, but Cardano made a lower low. That's why I think, that's why I drew that price path like that, because I would anticipate altcoins make a lower low. Because if Bitcoin really rallies here, I don't think the majority of altcoins are going to rally as hard as Bitcoin. Bitcoin is like is the first mover. Man, Cardano's looks like it's getting ready to fall off a cliff. It has fallen off a cliff. Holy shit. This is looking bad. Man, Cardano's weak right now. And you can see what my bear market target is for Cardano. And honestly, I might buy Cardano. If it's 12 to 17 cents, I'm buying it. I'm buying some at least. I'm at least making it 5% of my portfolio. At least. Even though I'm not a huge fan of the project, but I mean, shit. If I can catch anything even close to a low, I mean, why not? But that's why I made that price path for a general example. Lower low in altcoins as Bitcoin makes its first higher low, even if it's over a year later, right? So this was over a year later, 470 days, over a year. And that would be my guess. And again, that's me guessing what happens in 2022. Because what could happen in 2022, which in my opinion is the third most... shoot, I'm going to have to end this stream here. What could happen in 2022 is this. I don't think this is more than 20% probable, but I think it is a double digits chance is this. Totally possible. And that could be like 73 to 75K. And in that event, the price path of BPRO could be drastically different. if that were to happen in 2022, come all the way up in the middle of the year and then come all the way back down, right? The end of, where BPRO gets during that could be like 3 to 6 cents, in that type of rally. So, but you said end of year. And if that were to happen, BPRO could go, have a, go up to 3 cents again. And then, as Bitcoin hits that 73K level, and then come all the way back down here. The end of year prediction could be exactly where it is now. It could easily happen. Is that the most probable case? No, I don't think it is. But it's a guess off of it's a kind of a shot in the dark, really. Ask me answering that question, but that's what I got for you. All right. Okay, I'm going to do a quick thing of Hather, Anchor, and Phantom, and then I've got to be done. Ooh, yikes. This looks like it's coming down to 29 to 30 cents. Yeah, it already broke this trend line, so it could hold on, but I would feel more comfortable picking that up around there, around that point. Yeah, around 29 to 30 cents would be where I would be interested in that. Now, in a capitulation, it could come all the way down to like 20 cents, but just structurally, 29 to 30 looks like a good point. All right, and then Anchor. This is weak. Man. Whew. I feel like I'm not getting enough price history out of this, though. Yeah, here we go. All right, that's better. If Bitcoin capitulates, Anchor's going to hit down here. 2.5 to 3.2 cents. Non-capitulation Bitcoin, but also non-pump. It just kind of, stays treading around. This is probably going to test the bottom of this bar. So it'd probably come down to 4.8 cents. Without assuming that there's going to be no major Bitcoin pump. So my target areas would be 4.8 cents and somewhere around 3 cents for different situations that happen in Bitcoin. And then Phantom. I gotta do this quickly because I gotta go. All right, Phantom. Phantom could come as low as 58 cents if Bitcoin does have a capitulation event somewhere around this area, which would be the bottom of this structure, the top of that structure, the top of that structure. But a wick below, maybe wicking down as low as 50 in a capitulation event. Non-capitulation 2022, slow bleed out. I would say it's going to rock and roll between there, which is the bottom of that and the top of here and that wick. So somewhere between 93 cents without capitulation. With capitulation, somewhere closer to 50. And somebody, I guess I'll do it quick. I'm probably going to cover Veracity on a video, but oh, here you go with, I mean, Veracity is honestly an easier chart to read right now. Look at that price path I drew way back here. It's following it pretty well. I don't know. Veracity, you're just going to have to keep your eye on the ball. It's going to be easier to read, but you got to keep your eye on it. So the top of this is 1.8 cents. Okay, the 1.8 is its current support, and the weekly 10, this is the red line that I've drawn in. The weekly 10 is its resistance. And you're just, what happens, with Bitcoin and Veracity at that point, I don't know, but Veracity has to make a decision somewhere in late March. It might be early April, but it's either going to come crashing down or really race up here. But for the whole month of March, Veracity price is going to be between, unless Bitcoin capitulates soon. So assuming Bitcoin does not capitulate, Veracity will stay very, very likely between 1.8 cents and the weekly 10, which currently is at 2.4, but it's descending, right? And it's just going to chop around in here. That's all that's doing right now. Veracity's a lot easier of a read than most altcoins. All right, rock and roll. All right, I think I'm good to go. And again, every Tuesday and Thursday at 10:30 a.m. New York time, feel free to check out links to the Discord. If you like these live calls, you can, you jump on your camera and microphone, all right? Or to keep your camera off, ask me questions live. You can view my screen live. You can share your screen to make sure you, understand the concept. And if you're drawing your own lines, feel free to join again. And we'll see you on Thursday at the same time, same place. We'll see you later.